putting you to panelists, and now I'm going to unmute you, and looking forward to meeting you. Oh, unmute. I wonder why the unmute isn't working. There we go.
I just unmuted myself. Does that work?
Yeah, we're good, Larry.
You can hear me.
I can hear you loud and clear. Do you have a screen you want to share during our interview?
Oh, I really don't. I didn't realize that was a possibility. I apologize.
That's okay. Nice to meet you. Why don't you tell us a little bit about how you got involved in the business?
Dale, you want to share your screen?
I am going to do that.
Sure, Dale. Happy to. First of all, thank you for including me in this chat. I've been listening to the whole thing. It was very interesting to me. The reference to Edwin Starr, I knew it immediately. Okay. I sense that we might be of the same generation, but
I'm sorry.
No, you had to be listening to music back in the 60s and 70s to pick up on that.
Yeah, so you and I have seen quite a few cycles. I got involved in the business, let's see, 1975 as a runner on the floor of the Chicago Mercantile Exchange. What was your christening?
79 when I graduated from college. I went to New York and worked on Wall Street as a financial analyst in an M&A group, and moved on from there. Yeah.
Nice. So M&A was better than, I think I was making $80 a week, just working market hours and living at home with my mom in Skokie. You had a real job coming out.
Well, in New York, it didn't go far. My first salary was $14,000 a year.
Yeah.
And I had the distinct pleasure of
what underpass did you live under in the city? Huh?
That was cheaper then. We had 4 of us in a 2-bedroom apartment.
Yeah. Cool.
I had the distinction of sitting right behind Dennis Levine, who went to jail, and I watched him take phone calls from Ivan Boesky as he was leaking all our deals.
Yeah.
And one of the other guys there and I threatened to call him out on it, and he told me he knew people who would kill me for $1,000. So this other guy and I said, "Hey, look,
tough house, man.
If he takes one of us out, the job of the other guy is to get retribution."
Wow, that is really a rough way to. And you decided to stay in the business after that?
Well, yeah, I didn't go back to Wall Street. I moved over to the investment side. So my career has been as an investor and fund manager.
Okay.
And I originally started off in venture capital and technology, and so I was investing in floppy drive manufacturers in 1983, and I did all the technology investing in private equity with 2 different firms that I was with, all the way up until about 2002 or 3. I was very fortunate. In 93, somebody gave me a business card with the internet address on it. Said, "Send this to my internet address." I said, "What's that?"
Yeah.
And then I discovered that was going to be a good business. I went and made a lot of investments there, and it worked extremely well until 2000. Some of them were bubble-like, but some of them were actually quite genuine, good businesses. And in 2000, a bunch of people gave me money and said, "Go buy more internet." I said, "No, you don't want me to do that." And so I gave the money back and quit. And since then, I've been managing my own money, but it's kind of grown into a fund. And I was short the financials in the financial crisis. I didn't know about what the guys in the Big Short did. The derivatives that you could use.
What a complicated trade that was.
Yeah, it's very complicated. But I was short the financials, although I got pretty badly abused when the government outlawed short trading in September of 08, and I saw a 4,000 basis point move against my positions in 2 weeks. But But 08 was what really was kind of, is when did I become radicalized? Well, it was 08, and the GFC hit, and I was just stunned by the government response. And I started studying what does well in inflation, because they're clearly printing so much money that we're going to have massive inflation here. And I went out and I got smart about oil and gas and gold. And as time went by, it became clear to me that I couldn't figure out oil and gas. It was just too complicated. But gold was pretty straightforward as an inflation bet. And then the gold miners are a leverage on gold, or leverage play, I should say, on gold. And so I started moving into the gold miners, and I put some money with some very good gold mining analysts and investors, and I learned from them, and ultimately grew this into a fund that I now manage that does exclusively gold and silver mining companies. So It worked
Okay.
extremely well for a couple of years. As everyone knows, we had a
2015, there were a lot of 500% winners, weren't there?
yeah.
Wasn't that
Well,
the year?
well, no, from 28 to 2011, yeah, we did well. I would say 500%. There were, yeah, if you started in 2004, which I didn't, there were a lot of winners between 2004 and 2008. Then there was a big check back. Then from 08 to 11, there was more winning, and then I ran into a buzzsaw. I misestimated the ability of the system to regenerate itself and create an even bigger credit bubble, which is what I think we now live in. And so I suffered quite badly for a number of years, but I'm either stupid or stubborn, but I haven't given up. And if you look at my, I just reposted it and I put it as my pinned tweet on Twitter. I'm at Lawrence Lepard, one word, on Twitter. You can see that the theme I'm basically playing is the theme of, credit bubbles lead to credit busts. And when credit busts occur, you're forced to, actually, if you can, Dale, if you can go to just my pinned tweet, that'd be great. You'll see the chart.
Okay.
Credit busts lead to to printing of money. And as a result of printing of money, you're ultimately going to have inflation. Click on that chart there, Dale, gross GDP as against all sector debt. And what you'll see is, something that's unsustainable. Right, perfect. This, the blue line is what generates income. And the income is used to pay the interest on the red line, which is the debt growth. And something's got to give here. It's unclear when. I'm not saying I know when. Certainly haven't known to date. But this is a mathematical certainty because we've taken interest rates about as low as we can take them. Obviously, we've taken them negative in many places, and the system is just begging to blow apart. Do
you think what's happening in the overnight repo and Fed funds market
absolutely
is a canary in the coal mine?
Absolutely, it's a huge clue. It's a huge clue. I mean, the person on Twitter who has this, in my opinion, nailed the best is Luke Groman, who I subscribe to. It's a modest cost. I highly recommend it. His view, which I share, is that the central banks have no choice but to continue printing money from now until forever to keep the system going, and that they will always err on the side of that, and that as investors and others come to realize that that is the policy, then Gresham's law will kick in, which says that bad money shoves out good, and which is to say that people will shift their savings and investments into things which are going to hold their value. And in my belief, that's silver and gold mining equities will be the best.
Okay. Do you see crypto as a competitor to it?
I do. And I have a positive view of crypto. I know many gold people don't. What I like about crypto is it's teaching a new generation about Austrian economics and sound money. If you actually if you read the Bitcoin white paper, you'll see that Satoshi, whoever he is, that was a big piece of what triggered his development of the system. His belief that any money he saved was continually being debased by the government with their printing and spending. And I've long believed that, and I think it's only grown worse. And it's really kind of tragic what's happened. I mean, I look at retirees who can't get any yield. I look at people who have savings that don't buy nearly what they used to buy. I look at our healthcare costs. I look at one of your guests earlier mentioned how the inflation statistics are completely cooked. And I strongly believe that's correct. If you look at Chapwood, if you look at...
Well, I don't know, Larry. I mean, we barbecued a flat panel TV this weekend and it cost us less than a year ago.
Well, there you go. Yeah, well, I love the Fed meeting.
It was hard to digest, but...
Yeah, I love the Fed meeting where I think it was Dudley said something along the lines of, well, my iPad is cheaper.
Yeah,
and
right.
You can't eat an iPad.
Yeah, or live in one.
Yeah, exactly. So
okay, so it's obvious that we're talking about central planners running amok. You have a view on what's going to be happening with the dollar during this? Do you think the dollar is?
I'm a dollar bear. I can't.
Have you always been a dollar bear?
Well, no. I mean, a little bit earlier, and there's certain periods of time when I'm not.
Okay.
It has been the cleanest dirty shirt, right? And
right.
Brent Santiago and others have pointed out that where are you going to go when you want to have cash? I mean, But I think that and that's because of the system and the way we have it set up as a reserve currency. So there've been times when obviously hasn't paid to be a dollar bearer. But I think eventually the twin deficits that we run, the deficit in the federal spending and the trade deficit, the dollar's going to start to trade off of those. And when it does, people are going to realize that it's enormously overvalued. In particular, though, I mean, if you look at I know you're a currency site and you guys do a lot of work on which is the right currency to be in. I kind of look at them all as, fiat pieces of paper, or claims on nothing. And I think the right currency to be in is gold or silver, or real assets.
Then let me ask you about this.
Yeah.
Poor man's gold, gold silver ratio, putting a little peak, interesting on the monthly, what it held here. Do you think that the gold silver ratio
I think that's
out?
I think that's going to break, and I think silver is going to outperform gold. And I think that's actually a very, very good indication of where we are in the cycle and what the next model looks like. In fact, I use silver as an indicator for where gold is going. I don't know if you watched in 2011 when gold cratered in 2011. And if you look at it, if you go back and look at the charts, you'll see that silver cratered before gold cratered.
So it leads.
Silver very much leads gold, in my opinion. And if you look at that ratio, I think it's going to adjust substantially in favor of silver.
Well, you've been around a long time, Larry, from what you've told me. I remember this ratio trading 40.
Oh, yeah. I mean, there are times when it was 15, but that's a long time ago.
Yeah, that was centuries ago, right?
Yeah, I think it was earlier in this century it got that low.
Really?
But I could be wrong about that. I don't have the facts right in front of me.
Okay.
But it's been in the 2030 for sure this century, I think.
Okay.
And so it's
Are you level sensitive in any of this stuff? I mean, a lot of people that believe in sound money believe this: don't wait to buy gold and wait. Is there ever a right time to be, coming out of the market?
Yeah, it all depends on your time frame and what you're trying to achieve with your investments. I mean, there's no.
Well, if you're not Rip Van Winkle.
Yeah. Well,
how about that?
Yeah. Okay. Fair enough. But I think that the average person, let me give you my time frame and what I think based on that. Okay. My time frame for the average person, the average investors, is you should be kind of making bets that are 1 to 10 year bets. You shouldn't be trying to, unless you're a professional, it's what you do all day long.
I agree with that.
You shouldn't be trying to play the swings.
Most should not even attempt this.
Right. And thus, and I think the asymmetry right now in the gold dollar bet, that cross, is so incredibly favorable for gold that, whether you buy it now or whether you bought it at 1550, it doesn't matter. And if you're waiting to get to 1420, which it might, or 1400, or who knows, even 1300, that's in the longer term scheme of things. That's going to amount to a very small rounding error, because if you look at all the fiat money that's out there, and what I believe will happen happens.
You're in the 5,000 camp?
Yeah, easily. I think very easily. I mean, the last high was 1900 in 2011. Once we take that out, then we're in a new bull market again. And, this is a small market compared to the dollar asset market or the equity market or anything else. And when people start to realize that their currency is continually buying them less, this thing's going to run away.
Isn't that true, even more true? If you put all the miners' market cap together, it wouldn't even equal IBM? That's
correct. That is correct. I mean, and IBM's a levered market cap too, by the way. The equity is probably not worth what they say it's worth.
Okay.
It is a very small area. And, what needs to happen is people need to come to the realization that the government is trapped, and that in order to keep things running, they will always do which is most expedient, which is to print money. And you can see the clouds on the horizon. I mean, if Elizabeth Warren is elected, we're going to have, a forgiveness of student loans. We're going to have incredible spending on health.
Darn it! I shouldn't have paid my back 4 years ago.
Exactly. Yeah. Right. I mean, it's incredible.
But you know what? You know what it was 40 years ago?
No.
Like 4,000.
Right.
Not 400. Not
right.
40. So it just goes to show you how out of hand these are. So, do you have a view on a fairly large market, which is bigger than all the bourses, and that would be debt, sovereigns? You pay attention to yields. Part of the
Yes, I
bullish
mean,
argument for gold and
yeah.
silver is a lack of opportunity costs with negative rates. At least you don't have to pay except for storage to own gold unless
Yes,
you
I
use a
do. I
coffee
mean,
can.
you can't get yield anywhere else. There's a great chart in a book done by Incrementum, Ronnie Stofferle's group, that just shows that in all currencies
Oh, I
over the
interviewed
past,
them.
yeah,
Yeah.
over the past 20 or 30 years, gold has generally appreciated about 7 or 8% a year. I mean, it has down years, don't get me wrong, but if you average out a bunch of years, and think about it, if you had something that you could buy today that you kind of look at a 30-year history of and it's gone up 7 or 8% a year in the currency of your realm, that 7 or 8% a year is not bad. I mean, in today's yield environment, in fact, it's damn good.
That is
And
probably the real rate of inflation, somewhere there.
well, so
Larry Leopard, Steve Volge, someone
hey,
else
Steve,
who
yeah,
Hey,
Steve
so
believes his training is, even though he's from Greece, his economics are Austrian. Correct, Steve?
awesome. Yeah, I like Austrians. Well,
indeed.
I think the real rate is understated right now because I think inflation's understated. Um, I think if you look at, and that's what it's going to take, Steve. It takes people seeing that the money they are saving on a dollar basis. I mean, the bonds they are buying, on a dollar basis, are not going to buy as much in the future. And for them to say to themselves, how do I protect myself against that? What's the alternative to a currency that can be printed to excess in order to keep a credit bubble alive? I mean, that's really the issue. The issue is we live in an enormous credit bubble right now, enormous, $14 trillion of negative debt, negative yielding debt. I mean, what more can they do or say to you to prove to you that it's a fake market? I mean, it's,
Well,
taking,
okay, you bring up fake market.
yeah,
I've been reading diatribes about manipulation in the precious metal market. Jim Blanchard opened that, I believe, Shanghai Exchange to emancipate precious metals from the paper market. Do you believe that central planners are also manipulating precious metal prices?
I think the answer to that is yes and no, and it's to a degree. I don't fall into the everything is completely manipulated camp because I think markets are bigger than any group of people or set of individuals. Having said that, I think the central planners have a very strong interest in suppressing the price of gold and use a lot of tricks and things to do it. I mean, there've been proven cases of it. I mean, J.P. Morgan, Deutsche Bank, and others have confessed to spoofing and setting false prices in the futures market for gold. So yes, there's clearly manipulation that occurs. However, over long periods of time and with lots and lots of participants, manipulations fail. I mean, there was a London gold pool in 1968 that tried to hold the price of gold at $35 as it was fixed, and
Yeah.
there became a side market that traded much above that, and that's what basically shoved Nixon into getting off the gold standard in August of '71. So yes, I believe there's
Great story.
manipulation, but I don't think it's the whole story.
Okay. Yeah,
Um,
I didn't even know that, Larry. See,
yeah,
I always learn from.
the other thing that's interesting to note, guys, and I think this is important, whether you call this manipulation or you just call it the way the game is set up, there are hundreds, perhaps as many as 300 claims, derivative claims, paper claims, ETF claims on every ounce of gold that exists in the world. So in a sense, think about that for a moment. In a sense, this is the world's largest game of musical chairs. There are 100 people who think they own an ounce of gold based on some paper contract that
You
says
talk
that,
about the GLD now?
yeah, GLD and others,
Okay.
that think they own an ounce of gold, and in reality, they own a claim on an ounce of gold. What if everybody who had that claim said, "Okay, I'll take mine delivered right now"?
Sounds like our banks.
Right. That to me, it's the world's largest game of musical chairs. And when that, if
Try
and
and
when that
take 10
unwinds,
grand cash out of your bank today, Larry.
yeah, if and when that unwinds, I think there's a really decent chance that we see not just 5,000 an ounce, but much higher numbers than that. So, I'm not counting on that, and I can't prove that those ratios are correct. It's based on what some insiders have said. I mean, Christian and others who've made statements at various gold conferences. But I do know that there's a lot of paper gold, and that, you know, in the kind of thing we're talking about here, you know, if Lehman Brothers sold you your paper contract and Lehman goes tits up, you know, you're not getting your gold, right?
Right.
So
Okay.
that is certainly an issue. And that's why I strongly advise anybody who's using gold as insurance, which is what I do. I mean, I view it as financial insurance, to take physical delivery or find a custodian who provides you with, you know, physical custody of the gold that you purchased.
Okay, so the miners are a little difficult proposition than just owning
Very.
physical. So I'm wondering what type of due diligence you do, Larry, because a lot of these are really highly leveraged with a lot of debt, and you know, I don't know, is silver above production costs now?
Oh yeah,
And,
barely. It depends on
okay,
the company. I mean, yeah,
okay.
the mining stocks are literally a minefield. It is, you know, I've been investing for my entire career, and I've never found such a difficult area to pick stocks
Yeah,
in.
and then they do secondaries like
Oh yeah.
McEwen, you know,
No,
oh,
no.
I'm not going to float any more paper.
Oh,
And then they do a secondary and dilute.
it's brutal. It's absolutely brutal. I mean, first of all, Murphy's law applies to mining. You know, anything that can go wrong will go wrong, right? I mean, you know, the mine
Oh,
will
I thought it
flood.
was two liars standing over a hole.
Well, there's that too. You've got
Oh,
that's a problem you've got as well with
okay.
managements, and I've been subject to that. The only thing I can say is that you know, the larger miners, you know, have got a certain amount of that beaten out of them, and just because they have to. And I can also say that, you know, if you find somebody who's good at selecting them, you can significantly beat the averages, which is what I've been able to do. But it's the kind of area where you absolutely positively have to have a lot of diversity, because, you know, things are going to go wrong, and it's okay. I mean, if you're looking at a situation where you've got, you know, 10 stocks, you know, one of which will be a 10 bagger, a bunch of which will be 2 to 5 baggers, and 2 or 3 of which will go bankrupt, that'll give you a good return. But if you
Yeah.
pick the 2 or 3, if you thought you could do it on your own and you pick the 2 or 3, you know, you're really a pretty unhappy investor.
So
So
this is a time period I was talking about, Larry,
yeah,
2015. This is
yep,
when you could have bought miners for, you know, some of the, they may not have been majors, but they weren't exactly juniors, for a couple of bucks, and they went to $8 or $10 on this run
right.
right here.
You know, 2016 was a lot of fun. I mean, my fund was up 85% that year. At
Yeah.
one point, it was up 180% that year. Now that was the blast off of the new bull market,
Okay.
which we've subsequently, you know, consolidated. If you look on there, you see you got kind of a nice
Yeah.
flag going on in Newmont,
Sideways.
right,
Yeah.
sideways. And you know, my sense is when Newmont takes out 47, it's going to run like crazy,
Okay.
as will a lot of these other miners. And Newmont's, you know, a big one. So they're little ones, you know, that have been 10 baggers, and several in my portfolio became zeros.
So is your Twitter handle the best
That's the
way for
best way to
people to
follow
reach
me.
you?
Yeah, that really is the best way to follow me. I tweet a lot about mining. I tweet a lot about monetary economics. I tweet a lot about the time schedule that we're on here. And
How about your fund? Do you take retail money,
no, I
or it's
can't,
closed?
unfortunately. It's a private fund. I can take accredited money, and I've got
Okay.
lots of accredited investors and some small institutions in it. You know, the minimum is 50,000, and
Okay.
you know, you can get in and out on any given month. It's audited. You know, I've got a lot of references. Been around a long time. Got
Where
a
do you
wife,
trade from, Larry? Where are you
wife
from?
and 3 kids. I have 3 accounts. I use Fidelity as my prime broker, Interactive
No, I'm
Brokers.
talking about
Where
where
am I
you're.
located?
Yeah.
Yeah, I live in Wellesley, Massachusetts,
Okay.
and I have an office here. So
Okay. Let me
just
ask you
outside of
this:
Boston.
someone that has a belief like you do about the system imploding, and you probably have a family of kids and so forth, or are they grown, or?
Yeah, I have a daughter who works for the Wall Street Journal, and
Oh,
I have 2 kids in
okay.
college.
Okay.
Yep.
Do you want to ride out what you can see coming down the road from Massachusetts?
Oh, that's a great question. You know, I don't know. I mean, I believe in this country, and I believe that we're in a fourth turning, and I believe that there'll be some real unpleasantness. But I grew up in the Midwest, and I'm fundamentally, I believe in the goodness of humankind and human beings and Americans. And I think that as bad as things are likely to become, I think we'll figure it out and we'll solve these problems. It might be kind of sloppy in terms of the politics, and you look at all the vitriol that's being thrown around today. But I think on the other side of this, it'll be a lot better. I mean, the one thing that's very clear to me that's going to happen is that fiat money is going to fail. And I think
we're going to have some type of disruption, financial disruption, right? And
in my opinion, yeah.
Yeah. So, and some type of currency reset.
Right. Exactly.
And, with what's happening, and, I love America too, Larry, but there's so much anger and vitriol here while things are still being held together. Mm-hmm. I'm wondering if our untested generation, talking about baby boomers, mm-hmm. how they're going to handle being adversity. And do I want to be in the middle of it, or watching it on TV from Costa Rica?
Yeah, totally fair question. I think everybody has to make their own decision on that. I think the baby boomers actually probably will have the hardest time of it, and I'm one of them, and it's because we've had a pretty damn good life. I mean, living in the
sweet spot.
Living in the shadow of what our grandparents did in World War II, and they were a hero generation. I'm a very big believer in the fourth turning, theory of what's going on, and that's a great book.
Can you give someone just a quick review, break it down Cliff Note wise for the fourth turning?
Yeah, really quick. A book called The Fourth Turning by Howe and Strauss. Best book I've read in 15 years. Highly recommend you get it and read it. The theory is that society moves through cycles, and you have the fourth turning is the time when you have a big crisis every 80 odd years. The last one was kind of the Depression, World War II. The one before that was Civil War, and the one before that was the Revolutionary War. And the hallmark of a fourth turning is all the rules change. The old system is broken and gets destroyed, and a new, better system emerges, and it's a hero generation that brings in the new system. My belief is that this fourth turning will is occurring. It started in 2008. They generally take 20 years to happen, 20 to 25 years to happen. So we're kind of in the middle of it. And everyone can see that this system is broken, right? It's obvious. Look at our politics. Look at our money. Look at the inflation. Look at the debt. I mean, this is a really broken system, right? And, you ask 80% of Americans, they want term limits. Do we have any chance of getting that? No. Politicians go to Washington. They're making no money. They got no money. They end up worth $30 million. I mean, if that's not corruption, what is? So this has got to be fixed. And what's going to happen, in my opinion, is we're going to have a financial collapse that's going to make 1929 look like, a rounding error. And when that collapse occurs, hopefully, I pray that enough people will realize that we've got to go back to first principles, which is you've got to start with sound money. And so we'll have gold and silver as money, and we will rebuild. And the good news is that nothing will really be destroyed in this fourth turning unless we get into a war with China or Russia.
I heard we're going to be too busy with internal strife to fight a world war.
That's exactly what I think too. And so as a result, what I think will happen is, they'll try and do another currency and a new dollar, and everyone's going to go, why should we believe you? I'm only accepting silver coins. I'm only accepting gold. And, pretty soon, even the people who are at the top of the system, well, a lot of them will be deposed, and Ben Bernanke will be in the books right alongside John Laws, one of the greatest monetary frauds ever. And, we'll be on sound money again. And I think once we get on sound money, I think there's a really bright future for my kids and for, the last years of my life. But I think it's going to take some strife to get from here to sound money. Because
what a great interview.
Yeah. The people who are in the system right now and running it, trust me, they love the way it works out. I mean, Jamie Dimon loves this system, right? He makes $30 million a year.
Yeah.
So
minimum.
It'll change.
Yeah.
Like everything else, there's a cycle and it will change. And I think we're in the middle of the cycle, and that's what's scary, and it's difficult for a lot of people, but it's also an opportunity if you study it and understand it and think it through. You don't have to be a victim here. You can come out of this thing, in better shape than most, I think, if you're
the Chinese definition of opportunity is
crisis and opportunity. Yeah,
exactly. Danger and opportunity.
Opportunity.
Yeah, the danger is you miss the opportunity.
Well, there's that too. Look, don't kid yourselves. There will be outright danger. There are going to be some people who are going to be badly hurt, and it's horrible. It's absolutely horrible. But don't blame it on those of us who believe in sound money. I mean, we were all along saying, hey, this isn't going to work. I hope the blame falls. I mean, they're going to try and shift blame. I've seen people say, well, it's all you gold standard guys who are going to blow up this system. And hell no, your system's going to blow up no matter what. We're talking about the alternative that's fair. I mean, if wages and productivity, I've got a great chart somewhere in my Twitter feed that shows wages and productivity, they track perfectly from 1900 to 1971. The average worker made a fair deal, and that's why America was a great place. And in 71, we went off the gold standard and financialization started to occur. And that's why, Jamie Dimon makes $30 million a year, and a guy working on the assembly line still makes, barely enough to get by. We've had enormous productivity growth from 71, and the average wage earner hasn't enjoyed any of it. And that's all because of fiat money. And most people just don't understand that. And it's tragic. It's absolutely tragic. I mean, people out there protesting, the people who voted for Trump, the people who, are protesting who want socialism, they don't understand that that's not the issue. I mean, yes, it is unfair. It's tragically unfair what's going on, but it's not because, of capitalism. It's because of, crony capitalism that they're getting screwed. They're getting screwed because we don't have sound money.
That darn Jekyll Island. The only Jekyll I liked was Heckle and Jekyll.
Yeah.
Anyway,
you know your history, Dale.
Don't I? I mean, very important.
Yeah,
very important facts, Larry.
Most people, I'm sure, don't get these references. It's just like Edwin Starr,
I know.
Most people listening to this have no idea who Edwin Starr is, and I think that song is one of the greatest anti-war protest songs ever written.
Well, anyway, when I do these interviews, I have one leg in the tar pit. So this dinosaur thanks you, my trading warrior brother, for coming in. Really a pleasure to meet you, Larry.
Likewise. I hope we can do it again, and I'll be watching your site more often.
We will, buddy. So everyone, the best way to follow Larry, and now I'm saying he's a must follow. I'm following him. And you could do it at Lawrence Leopard. To keep an eye on what's happening in the fourth turning with Larry. Thank you, buddy.
Okay, thanks, Dale. Take care. Bye-bye.
All right, that's a wrap, everyone. Remember, don't just count your pips, count your blessings. You're very welcome. Jekyll in 1913 was the end of USA independence. Ben's thanking you, Larry, Brock.
Thank you, Ben.
Everyone's appreciating it. So I'm going to end it on an up note. And I like the hopeful ending and your attitude about coming through. It's like investing, right, Larry? I mean, people have to live through adversity to become successful. And
absolutely.
So we have to do it in trading. Maybe it's a good training ground for the fourth turning to have to take a few hits in the market. Yeah, this downturn in gold has really, it's gotten me in great physical shape, and it's gotten me a lot mentally tougher. There's nothing like losing to make you. And what do they say? Failure is the greatest teacher. Success is dangerous. I think it was one of the. There was a superstition. If your first trade, when I was a runner on the Merck floor, I made a trade when gold was first made legal to own again. It came in at 200, and a local did a short for me, and I went, "Wow, it's that easy." And that it turned out to be bad luck for a while. Yeah, you gave it all back, right? They said, Dale, be careful. You should probably leave the floor for the rest of your life. Anyway. You're going to give it all back, yeah. All right. Thanks a lot, Dale. I really enjoyed it. Take care. We'll see you. F.A.C.E, take it easy. We'll see everyone tomorrow. Adios. Good hunting the rest of the day.